positive side, though, those operating profit numbers, they look great if you believe they can hit those targets. They're still burning a lot of cash and issuing a lot of stock, but the margins are absolutely headed in the right direction. What else do we need to take into account? I don't know if it matters to you, but Palantir is willing to take on more ethically dubious work from the government. We're talking, say, stuff that, let's say, Google refuses to do. More importantly, from the stock market's perspective, a direct listing is not an IPO. Typically, IPOs have lockups on insider selling. You have to wait 6 months before the executives and the private investors can flood the market with additional shares. Palantir said to lock up all but 20% of the shares held by existing investors until early next year. Though, compared to the most recent red-hot IPOs, 20% of the float is still pretty high. So just beware, the lockup ends sooner than you might expect. Finally, Palantir's corporate governance protocols are borderline obnoxious. I haven't seen this egregious kind of rule since the canceled WeWork deal, frankly. See, Palantir's 3 founders get what's called Class F shares with variable voting power. No matter what, they'll always control 49.9% of the voting power, even if they sell down their position. Plus, as the Wall Street Journal reported this morning, the company does a lot of so-called, and I quote, related party transactions. For example, the company lent $25 million to one of its founders in 2016. He only repaid it in August. Right now, this stuff may not seem like it matters, but if Palantir starts screwing up, just remember, the common shareholders can't do anything about it. You're just going to sell if it doesn't work. So how much should you be willing to pay for this thing? We've heard that the stock could start trading around $10, which would value the company at $22 billion from the get-go. At $10, the stock will be trading at 20 times sales or 16 times next year's numbers, assuming they come in at the low end of the forecast. That makes Palantir cheaper than recent deals, although it's also got much slower growth. The bottom line, I'm hesitant to give this one a full-throated endorsement because I hate the Class F shareholders thing, too much like feudalism, but right now the numbers do look good. If you can get Palantir for around $10 or ideally less on a pullback, you got my blessing to buy it. Just don't pay up too much for this one. There's too much mystery to it and too much selfishness, too, at least when it comes to corporate governance.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.